Let's get started with an email today. Kulwant Singh has written in. Now, he's taken a loan of 28 lakh rupees from LIC Housing Finance in 2009. Tenure of 15 years at 8.5% per annum on a floating term. So, the initial EMI that time was 27,580 rupees. With frequent change in rates, the current EMI stands at 30,289 rupees. Now, he learned that the EMI was revised downward with the revision of the interbank interest rates. So, he approached LIC and told them that he would like to switch over to some other bank or institution as he was paying too much. Now, they agreed to reduce the rate, which is in process. But he learned that the loan period, the tenure, was extended by almost 5 years. This results in an additional burden of almost 15 lakh rupees. At the time of the sanction, he was given a sanction letter, no copy of terms and conditions. Since the EMI was frequently revised upward, the extended loan period, he says, is hard to understand. What recourse can he take? So clearly there is a lot of, I know, misappropriation, mis-selling. I know what is happening over here. He's not been given the terms and conditions.
Correct. So, frankly, what's happening is there's nothing wrong which is happening. So this is a very standard thing that happens with most lenders. Now, when you take a loan, along with your sanction letter, you will also sign what is known as a mortgage agreement. So in that agreement, you have all these terms and conditions specified. Now, when you take a floating rate loan, the good thing about the floating rate loan is that when the interest rate goes down, you start benefiting because your loan gets paid off faster because, your interest component of your EMI is that much smaller. And therefore, you're paying more principal.
But that is theory.
No, absolutely.
I mean, it's not happened in his case. Obviously.
That's because the flip side has happened. So what has happened in his case is the interest rates have gone up. Now, when the interest rates go up, most borrowers are generally unwilling to take a hike in their EMI. They don't want to increase the EMI. And banks actually love that. So what banks do is they love to expand your tenure because then, because of the rise in interest rates, the interest component of your EMI is going to be just about enough to pay off the interest, which means your principal that is being paid is really tiny. Therefore, the number of years go up. Just because you have approached them, they have not increased the tenure now. Maybe you haven't realized, but your tenure has been steadily and constantly going up. So, a couple of ground rules that you must, number one, understand. Whenever there is a situation where the interest rates go down, it's fabulous because, you can lie low and you can relax because your principal is getting paid off faster. Your tenure will fall. But if the interest rate goes up, try and increase your EMI a little bit because that way, there is no way you should let go even one extra month of your tenure. Because once you start doing that, naturally, then the bank is playing what they are doing. And obviously, their business is to make profits. So they are actually trying to make merry out of the fact that, the interest rates have gone up and you don't want to pay an extra EMI. So the next thing that you must remember to do is whenever there's a situation, go increase your EMI. In fact, I'd go one step further. As your income increases, your expenses are not increasing in the same proportion. So why not try and make a little accumulation, make an RD or make a recurring deposit, a liquid fund or something like that, or just go to the institution and tell them, you know what, I want to pay about 5% more than what I was paying last year. They'll happily accept a higher EMI because if you are going willingly yourself and doing it, that's a great way to manage a home loan. So just make sure that when these adversities of rising interest rates hit you, this is what you should do. But having said that, my judgment is next couple of years, I don't really see interest rates rising. So to that extent, everyone can breathe a little bit easy, but that's only my opinion.
No, but also in the case of Kulwant, what do you suggest he does now? He's obviously now, I think he's reached a situation where he's woken up and he's decided to, take charge of his home loan. What we say on this channel over here, take charge of your finances, take charge of that home loan, monitor it on a monthly basis. And he's doing that now.
That's right.
What should be his next step? Should he change lenders?
Yes, absolutely. Your best step is to first go to LIC and ask them, what's the current rate going on? Just be a little aware, like you said. And are you getting a market-driven rate? So today's market-driven rate is somewhere in the range of about 9.25 plus or minus. So are you in that sort of a rate? Do you have to pay maybe 0.5% or something like that and get a slightly discounted rate? Is that a possibility? And if your difference is more than about 1.5%, than the going rate of market, then maybe you should also consider refinancing your loan. I've always said that you're never married to a single loan institution as far as a home loan is concerned. So if you think that your rate of interest is about 10 or 10 quarters, just by the way, and if you're getting a lower rate of interest through a refinance, please go ahead and explore that option as well.
Right. And to also, Kulwant, Kartik just told us, there are a lot of options available in the market. Go ahead, look for those options, refinance your home loans. My team will be putting up a graphic plate on the screen soon, which will give you an idea of where interest rates stand. Currently, what are the current interest rates that are being given by most banks and housing finance companies? We hope that will help you. Those are the current interest rates. As you can see, most of them are trending around the 9.45 percentage point. That is precisely what these banks and home finance companies, the leading ones in the market at least, are charging for home loans at the moment. So this is a good time for you if you want to, refinance your loan. So go out. I'm sure you'll get a lot of options over there, right? And before we move on, key takeaways that came from Kartik right at the beginning of the show here. If you have taken a home loan, remember that you also need to manage it. Don't just take the home loan and go off to sleep. It calls for active participation on your part, especially if interest rates are rising. Ensure that your tenure, that is the number of months that you have to pay that home loan, does not increase. Go proactively try to increase the EMI that you're paying. That ensures that you're paying off more of the principal. In fact, you can now also request the bank or the HFC to up the principal component in your home loan. So you're paying off more of the principal on a monthly basis, but do not allow your tenure to increase. You'll just end up paying too much on that particular home loan, too much interest on that home loan.
On our website, mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.